Yo, what's up, investors? We're back with another episode of KJD Investor. I'm yours truly, your host, KJ. And without further ado, let's jump into the portfolio. Okay, here we are right now. It's a new day, and we're sitting at $54,705.74 in the investment part of my portfolio. Last night we had a bit of a rally with the S&P 500. It actually ended a 3-day low on yesterday. The S&P kind of shot back up. The Nasdaq shot back up. So some of these markets are being swayed right now. So without further ado, I'm going to get into my portfolio, and I'm going to express my investment strategy going forward at the end of October, getting ready to gear up for the 5 biggest game changer months of the stock market's life. And I'm going to get to those 5 months and explain that at the end of the video. But without further ado, buying power right now is $370.69. Guys, last night I spent some more money. I did. I bought more stocks. USDC crypto, I got 101 USDC coin. I got a smidge of AVAC. And if you've been following, I had some Ethereum and I sold it at a profit. Some people want to know why I don't get back into Ethereum and get back into the cryptos and stuff. And I kind of put crypto to the side because it was so volatile earlier this year. And I had a goal at that time to get to 100K, and I finally made it. And it wasn't because of the help of crypto. It was because of the help of data and just taking risk, and also the data of the stocks and ETFs that have a history of providing multiplication for your money when you put it inside of them. And we'll go over a couple of those right now. You guys know I invest in the Mag 7, and one particular stock in the Mag 7 that really, really, really had a good effect on everything was Tesla. I don't have it right here in this particular portfolio, but Tesla, guys, set the stock market through the roof yesterday when they had earnings reports. Tesla, I think, is trading at $230. As a matter of fact, we'll go ahead and just try to see real quick. Try to see what Tesla is at. Here we go. Right now, Tesla is at 254.84. Yesterday, Tesla was even higher than that. It sent the market through the roof. Tesla had a low today of 253, but it opened up today at 244. So it's already in the positive. Even though Tesla looks like it's in the negative, it's not. Year to date, Tesla is only up by 1.95%. Now, that's the reason why I got rid of Tesla, because it is only up by 1.95%. Tesla has been underperforming this entire year until recently with the earnings report. And one reason I feel like Tesla has been such a underachiever is because their CEO. And I hate to say it because I'm not a fan of the CEO, and I don't dislike the CEO, if that makes sense. I'm neutral. If you ask me about Elon, I have a neutral appreciation for him. It's neutral. I don't hate him, don't like him. I mean, I don't have any opinions on that. Only thing I can say about the CEO affecting the price of the stock is he has his hands in a whole lot of stuff. I mean, you got the robo-taxi getting ready to come out. You got him dealing with presidential campaigns, and he's in commercials. He's running the app X, which is formerly known as Twitter. He's just kind of all over the place. He's putting himself in these positions where you either gonna like him extremely or you're extremely gonna dislike him. Those are the type of positions he likes to put himself in. And I just don't see how it's actually benefiting the price of the stock. That's just my personal opinion, guys. I'm a businessman at the end of the day. And like I said, outside of looking at the stock prices and everything like that, I have nothing against Elon Musk. I have nothing against anybody. But what I'm saying is I believe that by him being the CEO of Tesla and having his hands in so many different things, I think it affects the stock price in a negative light. That's why the year to date has been so low. That's just my opinion. You guys tell me what you think down in the comments below. I would love to hear what you have to say. Anyway, back in January, February, I was invested in Tesla. Tesla was trading around that time about $160, $180 a share. I was invested. Tesla was going up and down, up and down. It wasn't really doing much. So the first opportunity I got to sell Tesla, I did at a profit. You guys know I don't sell unless I'm going to make some money. Same thing with Ethereum when I had the crypto. I only sold it when it was back up in the profits. And I redirected, after I sold it, I redirect those funds back into other positions and put those dollars right back to work. Because the way I look at it, every single dollar is like a little soldier. And those soldiers are working for me. So I can do what I have to do to have a passive income type of lifestyle. And that's something you guys should know. That's another reason why investing in the stock market is so important. Is because you want to make this life as easy for you and as accessible for you as possible. So by doing so, I invest in the stocks that I know has a historical background. The data shows has historical background of multiplying my money. And so with little to no risk, So that's what you want to do. That's what I look for, companies that do that. The Mag 7 is good. Tesla, I haven't been investing in as much no more this year due to volatility, and I just explained about their CEO and all that other stuff. Information affects stock prices, guys, not just how much money is involved in the stock. Information, data, that is what affects stock prices. Okay, so a few stocks and ETFs I have been putting more money into, I will get back to it, is right here, SPLG. SPLG is the SPDR portfolio, S&P 500 ETF, and right now it's trading at $68.27. Yesterday, I ended up buying another $500 worth of SPLG. Now I'm up to 169 shares. Market value is $11,545.20. Average cost $62.09. My average cost even moved up a little bit, guys. That's because I'm continuing to buy more. Total return so far of SPLG is $1,044.40. I'm up 9.95%, almost 10%. Anything over 8%, guys, we're getting rich. And this particular portfolio, ETF in my portfolio will help get us there. This is my foundational ETF. This is like the main ETF right now that I am building up in my portfolio. I have a share size goal for this ETF. I'm at 169. I would like to see it hit 200 before the end of the year. And then when 2025 gets here, I would love to see 300, 350, 400 shares of this particular ETF. So I'm trying to buy it up as quick as possible, as much as possible, before that share price goes from $68 to $75 to $130 or whatever it's going to do. You know what I'm saying? I'm trying to get as many of it as I can at the lower price. Another ETF that I'm currently buying and constantly buying to help get to freedom is going to be this one. SCHD, the Schwab U.S. Dividend Equity ETF. Right now it's trading at $28.43. SCHD went through a 3-for-1 stock split or an ETF split this past month. Not bad. I got 217 shares of SCHD only because of the stock split. The value of the dividend and everything, that did not change. So it's all good. Market value, $6,172.48. Average cost is $26.09. Right now, I'm a total return of $508.49. I'm up, or that's a 8.98% increase, which is not bad. SCHD is actually doing really, really good. So I am happy to see all the good things that's happening right now with SCHD. And finally, another ETF that I want to bring attention to is my iShares Core Dividend Growth ETF. That's right, DGRO, which is a hybrid of dividend and growth. It's a iShares Core Dividend Growth ETF right now at $63.06. I have 72.84 shares, so market value of $4,593.45. Average cost is $56.66. Total return was $466.18 or 11.30% up. I am up in this position right now, and I'm currently adding what I can to this dollar cost average wise, just like SCHD, dollar cost average wise, because the bulk of my money right now is, like I told you a minute ago, is focusing on SPLG. But as far as dollar cost averaging, I try to put the same amount into these other, excuse that Instagram thing, but I try to put these other amounts into these other ETFs because I want to continue to grow those as well. Real quick look at Big Boy NVIDIA, $148.94 a share. NVIDIA is up right now. I got 54 shares in this particular portfolio. I'm up $1,241, and that is 19.18% up in the positive. Also, in the traditional IRA, without further ado, you see the total on that one is $43,330.46. I try to add to this position every single week at least. Buying power is $17,920.57. I have a good bit of buying power because I try to continue to add to that buying power, regardless if it's $100, $50, $150, $200, whatever I can invest. Excuse me, guys. I need some water. Now, I have 150 shares of NVIDIA right here. The same price, $140.91. I got 150 shares. That's $21,135.15. Average cost, look at the average cost, $109.98. Total return, $4,637.81, or 28.11% in the increase. NVIDIA. Guys, I'm telling you, I jumped in this thing when it was low. I got 150 shares in this portfolio. I just showed you I had 54 shares in the other portfolio. That is a combined total of 204 plus shares of NVIDIA by itself. And I didn't want to overdo my portfolio with NVIDIA, so I got great exposure to it and everything, but I also want to couple that thing with some more SPLG. That's why I got 46 shares right here in this particular account. SPLG, $102.56 is my position increase. Total return, market value is $3,146.55. Average cost was $66.07. So yeah, I expanded more on SPLG here, even the FTEC. So I won't have as much exposure to NVIDIA because I bought a big chunk of it back when it was really, really low. NVIDIA this past year had hit all the way down to like $90 a share, $98 a share. And I'm telling you guys, I was buying them like 50 shares at a time. I bought them 3-4 times at 50 shares every single time. So that's how I accumulated so many shares so fast. Okay. Oh, yeah, and also, guys, I wanted to remind you, when I was back talking about Tesla, because of my exposure to SPLG, S&P 500, that's my exposure to Tesla. I'm getting the Mag 7. I'm getting the entire Mag 7, but I'm getting it through the ETF way, the safer way than just buying that stock directly. Like I bought NVIDIA directly, and I got Apple directly, and I got Microsoft directly, and I got Alphabet, which is Google. I got that directly. I got Amazon directly. But with Tesla, I get my exposure to it through the ETF. So I let the ETFs do the work. I'm not the expert. They're the expert. So I just hang on for the ride. And as a result, my portfolio right now is over $98,000, and I got another $5,200 in the Fidelity account, which gives me a total of over $103,000. We've made our goal of that, and we're going to continue pressing on to the next level, to the next goal. I hope you guys enjoyed this episode of KJ the Investor. If you got any comments, questions, concerns, drop them down below in the comment box. And until next time, I'm going to see y'all in the next video. Peace.